Hey, what's up guys, John here. As of this morning, 10 U.S. banks are now downgraded. This happens just 2 weeks after the entire U.S. was downgraded by Fitch.
Moody's downgrading 10 U.S. small and mid-sized banks.
Moody's Investor Service downgrading 10 banks.
And now what we're starting to see, these headlines are shocking. Many people wouldn't believe it a year, 2 years, 3 years ago. But here we are. We're going to step into massive hyperinflation and a very big problem in America. Look at this headline. De-dollarization will be a vicious cycle as hyperinflation leads to higher interest rates that will further erode the greenback's power. Janet Yellen, a natural way to diversify, talking about diversifying against and away from the US dollar. Janet Yellen now says Americans should anticipate a decline in the US as the world's reserve currency. What's really going on and how can you prepare? This is what's going to happen. They're walking us into this erosion of the dollar. For example, look at this. Jared Bernstein, the dethroned king dollar, right? The government needs to step in to drop its commitment to maintaining the dollar's reserve currency status. April 18th, 2023. Jared Bernstein, who is he, right? Well, he was just appointed in the White House. Statement from Biden on the confirmation of Jared Bernstein. I want to thank the Senate for confirming my nominee for chair of the Council of Economic Advisors, Jared Bernstein. Our economy continues to show progress tackling inflation while unemployment remains at historic lows. Well, I don't know about all that. While there is more work to do, jobs are up, wages are up, and inflation is down. And Jared uniquely understands that a job is far more than a paycheck. It's about dignity of work, right? Well, his pride has been discussing getting rid of the dollar for over a decade. Literally over a decade, he's been talking about this. I mean, look, 2014, opinion, dethroned king dollar, New York Times, right? Basically coming up on 10 years, just that article. So we start to see what's happening. This plan, what's going to happen to the dollar, is going to be unbelievable. If you're an American, if you're saving money, if you don't know what's going on, I'm going to break it down for you in this video. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people. I mean, let's face it, a lot of people in America are completely asleep. They don't know what's happening, and they think that everything's completely fine. The facts are saying otherwise. And if you want to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Go there, schedule a free strategy session. We'd love to help you and position you for what I think is going to be the greatest rug pull and the greatest wealth transfer of all time. Take a look at this. BRICS. This just came out. BRICS Summit, Economic Shift, exploring a new currency and possible de-dollarization. Well, look at this. Moody's cuts rating of 10 U.S. banks and puts some big names on the downgrade list. Now, some of these banks, right? Moody's also changes outlook to negative for 11 banks, including Capital One, Citizens Financial, Fifth Third Bancorp, right? Among smaller lenders receiving official rating downgrade. And then you have these banks, but they're also talking about, right here. The rating agency cut 10 banks by one rug, while major lenders, Bank of New York Mellon, U.S. Bancorp, State Street, Truist Financial, Cullen, Frost Bankers, and Northern Trust are now under review for potential downgrade. So, I mean, this is how this whole thing's going to play out. This is what I'm seeing. They're going to do this. They're going to start to really weigh funding risk, credit cards, bank loans, mortgage loans, personal loans, auto loans. They're going to start to really become much more careful with the money that they lend. Especially as we start to see this. Federal Reserve officials say more U.S. rate hikes will likely be needed. Think about this. Think about it. The last, call it 18 months, they've been hiking rates every single meeting with the exception of one. They're rug pulling this entire economy. They're rug pulling the banking system. It would be foolish to consider anything else. I mean, think about this. They've issued so many loans. Auto loans that are underwater, credit card, business loans, commercial real estate loans, most of which are underwater. $1 trillion of commercial real estate loans needs to get refinanced in the next 12 months. $2.5 trillion has to get refinanced in the next 2.5 years, the next 3.5 years, from now until 2027. So you start to look at this, that's 1 in 10 commercial properties in America has to get refinanced. Now, commercial loans, nothing like a residential loan. Most residential loans are 30-year fixed-rate loans. It's locked in, $1,500, $2,000 a month. The borrower can afford to make the payments. They get the loan, and they make those monthly payments consistently. But with a commercial loan, every 3, 5, or 7 years, in most cases, you have to take it back to the bank and either get a new loan or sell the asset. That's what happens. The whole loan gets reset, and they have to qualify to get a new loan. But how do you qualify for a new loan? when mortgage rates went from 3% to 7.5%, insurance and taxes are going up, and rent's falling. You're not going to get the loan in most cases because most borrowers aren't going to have the equity in their properties to be able to qualify. So they're going to have to hand the keys back. It's going to be devastating. And they're going to continue to increase interest rates. So what is that going to mean? It's going to mean that more and more commercial property owners are going to be underwater. More consumers are going to start downgrading their offices. They're not going to have the financial means to do it. You're going to see more and more employees trying to find and pick up other jobs, second and third jobs, to try to make ends meet. It's going to be harder out there. There's no doubt about it. And we're going to start to see a lot more defaults, which is going to be extremely, extremely challenging for the banking system. Fed Bowman says more U.S. rate hikes will likely be needed. I mean, look at this. If nobody is buying these bonds, this is the bond market. No one's buying these bonds, flooding the market. Their yields go higher, which means the cost of servicing U.S. debt also goes up. Now at over $1 trillion per year in interest payments on $33 trillion in debt, and also rising quickly. Now they say that inflation is going down. They say that inflation is going down. I know this is what we're told that we should be believing. I go to the grocery store. I pay my bills. I'm looking at the cost of living. I'm not seeing anything going down. I'm seeing everything going up. Everything is still extremely expensive. I don't see any bit of a break. Nothing. So when they say that interest rates are going down, what they're really saying is what we're doing is working, and we need to keep doing more of it, which is going to be more and more interest rate hikes. So you just read between the lines. This is what they're going to start to do. In the U.S., interest rates on household items are skyrocketing. In just 1 year, the average interest rate on a credit card has went from 14 to 21%. New car loans, 4% to 8%, while used car loans are 12% plus. That's if you have good credit. Mortgage rates are at a fresh high of 7.2%, up from 2.7% about 2 years ago. How can the average person afford any of these items? I don't know. I really don't know. Because if you look at the average apartment in America, you look at what it actually costs, car insurance, car payment, food, everything is I'm shocked. I talk to my wife about this all the time. I'm shocked that people are walking around like everything is normal, because in most areas you need $10,000 a month just to kind of make it at the end of the month without putting life on a credit card, right? Like, how many people are making $100,000 a year, $120,000 a year? I don't think it's as many as social media wants us to believe. Surging U.S. corporate bankruptcies already surpassed total of all of 2022, right? All of 2022. And this is what I think is going to be the nail in the coffin. This is McKinsey, right? How much is this transition going to cost? Well, they say it's going to cost $275 trillion, right? $9.2 trillion per year. It's going to be needed from basically for the next, call it 30 years, basically, right? 25 trillion more than the current policy scenario. Every sector, every time frame would see a bigger bill. This is going to be passed along to everything. It's going to be shipping, distribution, transit, real estate, everything. They're going to be increasing taxes and printing money. That's what I bet they're going to do over the next few years, which is going to be devastating for the middle class. And for the wealthy, believe it or not, they love this because it means distress, right? Distressed sellers. It means people that need to get out from underneath of assets. And that's why you're seeing, many companies. Look at KKR. They just opened an office in LA. You look at Blackstone. They just raised a $30 billion real estate fund, mainly specializing in single-family rentals. You're starting to see, Starwood Capital. They have tens of billions of dollars getting ready to desperately deploy into the real estate market. They see what's happening. They see where the everyday American consumer is. And they're sitting with truckloads of cash waiting to capitalize on it. So when you see this de-dollarization, you see these headlines, many people say, it's never going to happen. They've been saying the dollar's going to die for, forever. Then why are the smartest people, the smartest and well-informed, and the most educated, right, that are holding all the money, why do they disagree with that? Why are they sitting there looking like this is the greatest investing opportunity of all time? Well, probably because they know more than the average American. They're not just basing all their information based on mainstream media headlines. They're looking at the facts. They're looking at what's actually happening. They see where capital is flowing, and they know what tomorrow is going to bring. It's going to be a massive opportunity. That's what it's going to bring for those investors. And I believe a lot of people in the middle class are going to be able to make a lot of money, but most of them won't. Point blank, most of them won't, because most are ignoring the facts. You want to get out of credit card debt. You really, really do. If you have credit card debt, you want to get out of it now. A lot of lenders are still offering 0% APR cards. If you have credit card debt, look into it. You really want to get into that 0% situation versus paying 20, 25%, 30% interest on some cards. If you can transfer that debt for 0%, you should look into it. But you're going to need a credit score of about 7. It says 700, many of them 700, 720. You're going to want to be 730, 740. You're going to want to make sure you get approved, and you're going to want to make sure you can actually get a large credit line versus getting approved for $1,000 or $3,000. Like, what does that actually do for the average American? Almost nothing. So you want to get approved for a really, really big line, transfer that credit card debt, maybe get 12, 24 months, 0% APR, and intro APR, and then you can take advantage of that. But getting out of credit card debt, having a good business, having cash reserves, having great credit, doing all of these things in advance, it's going to pay big dividends for you down the road. What do you think about this entire situation? Do you think that this is not going to happen? Facts are saying otherwise. If you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Go there, schedule a free strategy session. We can see how we can help you, and catch you guys in the next video.